Oh man, so welcome back to another Phantom daily price update, and today we've got Phantom up slightly 1% as Bitcoin is marginally green at the time of recording this video, up 0.4%. But when are we going to hit this bottom? What is the bottom? And I see a deeper dip coming, so I'm going to share with you exact levels I think. I'm going to explain to you what I think is happening to the wider market, because this is not, I repeat, not a Phantom specific issue, but we need to still know what are the potential price levels we could be hitting, and what am I doing with my Phantom position. So make sure you hit up the like button. Don't forget to subscribe. If you appreciate my perspectives and you want to learn some more, consider joining our 3 times weekly members only live stream, ijaz.uk/member, links in description. Jump into there to become a member, to look at your favorite coin, do TA, we can critique your portfolio, and more importantly, you'll get my perspective in real time on what I'm doing in the market. Right, as you can see guys, Phantom is having a pretty ugly week, as you can expect, right? The wider market, in fact, let's start off with looking at Bitcoin. I want to show you this on the Bitcoin chart just so we're just clear on what is going on. And you can see here a really big nasty last weekly candle here on Bitcoin. The week before was a really nice big rally week after the FOMC meeting. The week after that was a doji candle with the bulls and the bears fighting. At one point the bulls were trying to push beyond 48,000 nice and quickly. The bears said nope and sent us all the way down to 44,200, and in the end we met in the middle before this week, which has just passed, us getting sent all the way down to where we're at now, which is $42,500 on Bitcoin. Now, the question arises, are we going to come down to touch our trend line, right? Are we going to get as low as 40,000? That could be a test of our momentum line here before seeing perhaps a move to the upside. But what is the bottom? If we come across to my more busier chart, you will see that on here, you can see Bitcoin is falling back into this critical wedge. And in fact, I'm going to head over to the daily, make this wedge a little bit clearer. If we fall out of this wedge, that's where the concerns begin, because falling out of this wedge would mean you have a technical price target back down at the bottom of the wedge. Okay, and the bottom of the wedge starts to take you to price points at 33, 34 range, which is not ideal whatsoever. Now the issue is we tested it once, tested twice, thrice, and on the 4th turn we broke out. Now at that point when you break out, it's perfectly fine to get a retest, but we didn't. And you could see the risk was here when we were curling over and losing strength, and this was when the Fed messed us up. The Fed came out and spooked the markets. And if you want evidence of this, to know that this is not a crypto thing, because there's a lot of crypto influencers out there who are saying, oh no, this is so bad for crypto, people are getting panicking. This has nothing to do with crypto. This has nothing to do with Bitcoin Miami. This has nothing to do with any of the fundamentals, definitely. And it's not even to do with crypto TA or any patterns you've seen. All it is this. Very simple. Very simple. Nasdaq down. Okay, same pattern. Nasdaq down, S&P down. The markets were down. It's a down week for the markets. And when the markets rotate to risk off, I've been saying this for months, but for some reason people don't seem to understand it. When the market rotates to risk off, then your crypto is following. Same pattern. Same pattern. So it didn't matter what Bitcoin did this week. It doesn't matter what Jack Mallers, the CEO of Strike, announced at the Bitcoin Miami conference. Covered that, watch the video here. It's a great announcement, huge, and largely misunderstood, right? Misunderstood, swept under the carpet because of a bad week for Bitcoin. But again, it's market-led, it's inflation fear-led, and it's due to the fact that on the 4th of May, we will see our next Fed meeting, okay? And I've already covered this. The market is priced in 80% that we're going to get a double rate hike. But that's not what's spooking markets. What's spooking markets is how many of these double rate hikes are we going to get over the year, and what's going to happen with the balance sheet shrinkage. How quickly is the Fed going to hoover up all of this excess liquidity in the markets? And the reason I'm spending so much time on this is that's what's going to affect the price of Phantom. Because let's look at the TA on Phantom. Phantom created exactly what we said. Guys, go watch the video. In fact, if I had the energy, I'd edit it into this video to show you guys. But we said we're forming a bear flag just like this. I said this as we were about here. And the number of comments we received saying, oh my God, no, why are you spreading FUD? Why? No, it's just what the chart showed. It was obvious. Anybody who's done a little bit of TA can tell you we were creating a bearish continuation pattern. And we broke to the downside, unfortunately, for that. Now, that doesn't make a difference for me or my position. I'm not selling any Phantom. I'm not trying to time the market. I'm not a proponent of it. In fact, people in my live streams were asking me, oh, should we time the market? Because if we're expecting more downside, we can get better entries at the bottom. I said, that's completely up to you. I'm personally not somebody that wants to time the market. The opportunity cost of putting that bandwidth in to say, oh, I'm going to sell Phantom here. I'm going to pay some taxes and try to re-enter the market here. It's not worth it. I'd rather go figure out, earn some more cash and dollar cost average on the pullbacks. That's the key. right? Accumulate as much as you can of your favorite projects. Now, a technical price target for Phantom takes you past the 96 support level to about 92, 93. Now, I'm not saying we're going to get there. In order for us to get there, the market, wider, Dow Jones, S&P, Nasdaq would really have to start falling. Bitcoin would really have to start losing all of its support levels and start heading towards, 32, 33, those kind of levels for us to see these price points start to play out. But again, that is where our long-term red trend line sits. So it would make sense to come here and get a retest before heading higher. So those are the levels we need to be prepared for Phantom. Now, naturally, at any of these given support levels, even the one we're at now, which is at about 126, we could get a bounce, right? We could start building some strength and getting a bounce. And that is great. But the first level, like I said, the key level is for us to get above 165. This level here where we got rejected, until and if we can get past that level, retest and continue higher, things will start to look much more exciting here for Phantom. Until then, these continue to be great times to accumulate and buy the dip, right? You need to be patient and you need to build out your positions. And again, this was something I was talking about with my course member lives, with the members. You only need the price to go up once. If you're investing in Phantom and you believe it's going to get to $20 one day, you only need that to happen once and you can sell at that point, right? When it's at $20. But what you do need is the time to accumulate. So what if you bought one Phantom coin for 20 cents and you're so in love with your cost basis that you don't buy anymore? The aim is to build out a big enough position that when it does get to the price point you want, whether that's $10, $15, $20, you've got substantial amount that when it did do that 10x, you benefited from it, right? So you want the price to stay quite suppressed for a while to give you a chance to accumulate from a greedy perspective. So that's often a misconception that people have, is they buy something, they want it to go to the moon. Like, no, if you bought something and you really had conviction behind it, you'd want nobody to know about it, right? Similar to when I bought Tesla, I just didn't want anyone to know about it so I could buy more Tesla shares. And I was, each time I was getting a check, I was buying some Tesla shares and buying some Tesla shares and buying some Tesla shares. And I was like, yes, nobody knows about it. They still think it's a rubbish company and Elon Musk is crazy. Yep, buy some more Tesla shares. Same thing with these projects, guys. Just let nobody know about it. Let's buy some more tokens, buy some more tokens. So when it does get mainstream, then you can't unwind that. When everybody knows about it and the price skyrockets to $10, at that point, it becomes difficult to build out your position to a large enough position. So coming back to my thesis on the market. Well, my thesis on the market is that we've not reached, I think we're going to get another dip. I think there's going to be more volatility now between now and May. So before I was saying, okay, after the Fed meeting, we're going to get a rally. We got that rally. But now, for whatever reason, we just have to react to the live market. The Fed came out and they sent two of their officials to come out and be very, very hawkish. The minutes then came out from the Fed officials being quite strong in its tonality, being quite hawkish. I don't think the market's going to take too well to this. I think the market's going to have a bit of a sell-off leading to May the 4th. I don't know when that sell-off is going to be. Maybe we're going to have a nice little bit of a rally week and then a sell-off closer to the 4th of May. But I've made a note on my post-it notes that I'm expecting a sell-off before, on equities and therefore crypto, before the May the 4th meeting. And I think that is going to be the pullback for me to say I'm going to accumulate some more. If we see pullbacks before then, I'll start nibbling, but I want to see how low we're going to get in the lead up to the May meeting. Now, for me, I don't think the May meeting could come up with too many surprises. From an interest rate perspective, we've covered off the fact that, I can show you this as well, that the market has priced in 80% that we're going to get a double rate hike. So I don't think we're going to get spooked. And I think we're going to see a 0.25% increase, which could be an excuse for a rally. Where the market could get spooked is the balance sheet shrinkage. So the Fed could come out and say, we're going to start really aggressive with 95 or 100 billion in balance sheet shrinkage. And maybe the market could get spooked by the time frame in which they're trying to reduce this balance sheet. But apart from that, I think it's going to be a bunch of nothing burger. I think the market is going to have a sell-off in the lead up to this event and then have a rally thereafter. It's like the opposite of buy the rumor, sell the news, right? They sell the news and then they buy it back afterwards. So that's what I'm looking out for. I've made a note to say, okay, maybe we're going to have a choppy couple of weeks now leading up to the Fed meeting. We need to be prepared for it. But it's been a big red week this week and it's been tough for a lot of people. But net, we're not much further off than where we were. We're in fact better off than we were before the FOMC meeting, still slightly. So overall, manage your psychology, be patient, do not panic sell, see the course. Keep it simple, guys. Find your favorite high conviction plays, dollar cost average, buy on the pullbacks, build your conviction so you don't panic sell. Really important. And then sit back and relax. Don't always look at your portfolio. Go for a walk sometimes. work on your psychology, understand where your weaknesses are and what you need to improve on, and then let the market do the rest. As always, if you appreciate my blend between technicals and fundamentals, even on a Saturday, smash up the like button, guys. Subscribe. Don't forget, if you like my perspectives, you can join our course member live streams, ijaz.uk/member, links in the description. Get yourself set up and join our community of live members who can access my 3 times weekly live streams, and you get all the recordings as well. Ask me questions, critique your portfolio, look at your favorite coins, do tokenomics, look at TA. You can bring any question and get it answered by me on those live streams. You don't have to wait weeks. If you have a decision to make in the market, we can look at that and explore that as a case study together in our course member live streams. Thanks for watching, guys. We'll see you in the next one.